with the JOLTS job openings here, if we get a number that is higher than this number, meaning more job openings, obviously that would be considered good. We are forecast to drop from the previous number of 8.18 million job openings down to 8.09. And again, the Fed has held their interest rates high for a good bit of time now, and that is restricting the economy. That is slowing the economy. So it is normal to see jobs data declining because the Fed is also expected to cut interest rates and sort of start to reverse that, putting the brakes on. They're expected to start actually letting off the brakes and actually starting to accelerate the economy through the use of reducing their borrowing costs through the overnight federal funds rate. So they're expected to cut rates. And so that effect will be very interesting to see how that plays into the market, because if we go into those rate cuts and the economy is doing this, like it's stable, then it is expected that the economy will reaccelerate and things will be good, and you'll get what is called a soft landing. Let's say that, this is the rate cut point. Well, what if you get this? What if you get the economy doing this before the rate cut? Many would actually argue that at that point, you're what is called behind the curve. You've made the move to try and save the economy too late, which would look like this. The economy would struggle and perhaps enter into a recession for a period of time before reaccelerating, right? So this would be the hard landing idea. This would be the soft landing idea. Right now, my opinion is we are more in this territory. There are some people who would argue that we're looking more like this. But this is why economics is so difficult. There's, people who have different opinions and look at different indicators and weigh them differently. It's just like everything else, just like every single movie that comes out, there's people who are controversial, or every single, sports game, there's controversy. In economics, there's heavy amounts of controversy as well. So how I see it is I generally think that the economy is not necessarily growing rapidly, but not necessarily plummeting either, and that rate cuts will likely lead to a reacceleration in the economy. However, my view could get thrown out the entire window if this week we start getting more evidence that the economy is slipping, right? So jobs data is one of the indicators there. So the first major jobs data point of the week is coming out in 4.5 minutes. That's why it is important. JOLTS job openings give us a bit of an insight, give us a bit of a pulse check on how the labor market is looking. Are we going to get the soft landing? Are we going to get the hard landing? This number is not binary. It's not going to tell you, oh, we're getting soft, or oh, we're getting a hard landing. But it is a clue. And that's all we can do with markets. It's all about educated guesses. So this will impact my thought on where things are at. If you get a big slide, let's say you get a number today that is much lower than expected. If we come in, let's say 8 flat or 7.99, right? Million jobs, as opposed to the 8.09, that would indicate to investors that, okay, wait a second, things are slowing at a more rapid pace than we thought. And again, would go back to concerns about, the economy is sliding before the rate cuts. So let's keep an eye on that. Again, I don't have a lot of positions going into this. I'm long gold. I'm long IWM, which is the Russell 2000 index. 3 minutes to go. What I'm looking for here is if we get jobs data that comes in line, or let's say it's 8.1, for example, 8.1 million, that I would say is a positive thing. That would say, okay, we're stabilizing before rate cuts. Positive. So what does that mean for the dollar and gold? As I know a lot of traders here watch indices and others watch gold, and everybody has their favorite. If you get a big slide in jobs data, that's positive for gold because it's weak for the dollar.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
We'll see how surprising or not it is. All right. Dollar index moving lower. Indices also moving a bit lower here initially. That would signal that JOLTS came in. Oh, let's play guess the game. Hold on. Or is my sound? Yeah, it is. Okay. Guess the number. 8.03. That's my guess. Oh, was it? Oh my goodness. Okay, I was wrong. Oh my goodness, guys. 7.67 million job openings compared to the forecast at 8.09. Oh my goodness. 7.67, guys. I was way off. I actually would have expected a bigger reaction than that. The dollar index is moving lower. Gold loves this, which is good for my position. SPX sliding, NAS sliding, dollar index lower here. That does not set us up well for Friday, at least. You know, NFP could show something different, but this is, again, we go back to what we just discussed. Sliding data would be considered concerning for stock market investors, and investors do not need concerning stuff right before rate cuts in the worst historical month of the year, September. The market is already shakily, waiting for the September Fed meeting, and suddenly now you've got a slide in economic data here that is not pretty for the scenario. We also saw revisions lower, revised down from 8.18 million jobs in the previous reporting. So now we've got it's a pretty big slide in jobs data here this morning, guys. Wow. Gold is up on that data point. Let's take a look at GLD. And I bet you IWM, my trade on IWM is not looking pretty off that. I mean, it's still a winning trade, and I'm not going to lose money on this, but we may get stopped out today if IWM rolls over. Russell 2000 index. NASDAQ, S&P. S&P is still about flat. NASDAQ slightly in the red here. No massive, look at that spike and reversal. My goodness. So we'll see how the dust settles on this candle, but still kind of for NAS just playing the news candle movement. This thing could be, down at the lows by the end of the 15-minute candle or completely reversed. That is the craziness of trying to trade the short-term, charts on news data. But yeah, that is weak economic data. So the dollar just plummeted off that, which, I mean, that's actually a pretty sizable move for the dollar. Look at this, guys. We are down to 101.32. Not quite back at the lows, and kind of a bummer because I was looking at possibly selling the dollar, but to be honest, I still might get my chance. I still might get the chance to. This week is far from over. Dollar index could snap back and move higher into NFP, or this could be a signal that NFP is going to be rough. So we will keep an eye on this one for sure. Yeah, pound dollar, NZD, USD. May have missed this one again. We'll see. But if that rolls over, I'm still looking at pound dollar as a possible buy. NZD USD, same concept, looking for the rollover to 38.2% retracement. Then I might look for some buys. Nick, in the previous JOLTS news, do you recall dollar index moving this much? Remember that JOLTS, NFP, CPI, PMIs, all of them have the potential to move the markets a lot. So if, sometimes JOLTS moves the markets a lot. Sometimes it moves it nothing. It's all about the surprise. As we just discussed, this had a surprise factor to it, man. That is a big slide in labor data. If it had come out exactly as expected here this morning, JOLTS would be such a boring event. So remember that it's not about the event as much as it is what it tells us and how surprising that data point is. Right now, that's a good sign. Look how many times we've rejected this area of support. Seems like buyers want to hold it. Will they be able to? That's the question. For me, If we can break through the highs, I'm going to start trailing a stop loss further into profit. And if we can't, I stop out and take a loss. Canada's rate cut. Talk on Canada's rate cuts. 945. Let's take a look at the Canadian dollar. Forecast was 4.25, so it came in line with expectations. USD CAD. Dollar weakness. I don't actually know. I've not been keeping up very much with the state of the Canadian economy. They've got their press conference at 10:30, which will probably cause some swings. So it seems like it was expected to be cut. It got cut. And so that was, in line with expectations. The question then would become, with the press conference, what does the Bank of Canada see going forward? But I can't really comment past that. I really focus heavily on US data, so I can't give you a full comprehensive view on USD CAD. It's also not on the watch list for Edgefinder right now, so I just can't really give you a full comprehensive view. All right, let's keep pushing on. Oil down almost 1% again today. My goodness. S&P and NAS. Look at that. Completely faded that sell-off. Came right back into where they started. Russell about flat on the day now.
To start with, I'm in Eurodollar short. I've been in this position for a couple of days now, I think, since the 2nd. Now this trade is actually mainly driven by seasonality, which you can see here. So what I want you to do is just pay attention. So we've had the 25th of August right here. So we can see we had this peak. So we draw our line from the 25th until the sort of end of September, roughly around this area. So actually we'll just be a bit more accurate here. So during this period from the 25th of August until the end of September, we can see over the past 10 years, we've had quite a strong decline. If we look at the statistics here, so if we were buying the market for the past 10 years on these dates exactly, we would have lost 9 trades. But obviously I'm shorting, so we need to inverse this. So if I was if I was selling this market at this exact date over the past 10 years, I would have won 9 trades. So if we take it back to the chart, if we look here, when was this peak? Actually, let me pull up the where is it? The date range here. So the peak right here was, if you notice, on the 25th. So it was on, and this is actually quite rare for seasonality, but it was on the date exactly that we had this peak, which was quite a good indicator for me, especially to say that at the moment, or at the time, I thought the euro dollar was very, very extended. So if we look back on the daily chart, I am more in the mindset here of a reversion trade. So I'm using seasonality along with just, again, at the time, the distance that we had between the 200 moving average, it was 3.21% above, which is kind of a little flag for me to start looking for potentially a short position. Now, there's also another factor here. You might see at the bottom of the screen here, the take profit, and in brackets, we've got Credit Agricole. Now I'll show you why in just a second here. So this is my note-taking thing. It's on Notion. I write down everything essentially to do with the markets and what the institutions are saying. So inside here, we can see Credit Agricole from their bank report on the 30th of August. They are in short positions in Eurodollar, their entry, their target, and their stop. But I don't care about that. The only thing I'm interested in is what pair, what direction, and where are they targeting. So you can see they're targeting, very simply, the 1.06 level. So that would signal to me that, seasonality is bearish. I am more looking for a reversion trade. There's an institution already looking at this. They've given us their trade idea. So why not take a stab? For me, this is only half risk. It's only 1%. Normally I risk 2%. So I would consider this a half risk position. So, you know, if the dollar does start weakening, as it more than likely will do, then, you know, it's not an issue. And we've also, you know, broken sort of structure here. So I'm looking really for the retest of this level. And then if we can get a nice convincing H4 bearish candle off here, I may add in again to round off my risk at a standard 2%. So someone said gold, we can cover gold. So I was stopped out at break even, which is fine, to be honest. I'm not concerned about that. So I actually put a video out on my channel today about seasonality, and I used gold as an example. So I'll use it again here. I didn't mean to get rid of that line. So you can see I've got the orange line here on the 1st of October. And that's for exactly the same reason. Now I'm using seasonality quite a lot at the moment, so I'm not looking to get in any trades. So I'm currently in the planning stages, and this is sort of the plan. I'm showing you kind of how I approach the market now rather than trades that I'm in, because my portfolio is pretty flat. So gold, sorry, I lost a trail of thought there. Gold is very bullish, don't get me wrong. Almost everything is bullish for gold. The only thing I'm a little bit cautious of is the distance of the 200 moving average on the weekly. Now, I've been saying this for quite a while, that I do see a correction coming, or some sort of mean reversion. You know, we're almost 30% above. However, saying that, on the weekly chart, this can take, you know, up to 2 years. So the period we had here where we were above the 200 quite significantly, this was also about 30%. This took us 777 days to really sort of get back to this 200. So I'm not using that really as sort of a target or anything. It's more just one of those little alerts I've got in my head. Okay, there's a lot of articles coming out about gold at the moment, and almost all of them are bullish on gold. However, they all have something in common, which is a bearish outlook for the short term. Whether it's just a pullback or what, I don't know. You know, I don't know exactly what they're looking at, but majority of them are to say buy the dip. And what I can see here is, again, if we look at the end of August until sort of the start of October, we have a very bearish period for gold, and this is over the past 10 years. Similar situation, we've got 9 losses. So if you bought gold in this period for the past 10 years, you would have lost every trade. So that's something I'm taking into account. So at the moment, again, this is just sort of the planning stage of trades. I'm not looking to really get into gold now until after this period, after this orange line. So once we reach here, that's when I'll be free to start looking to open positions. But I'm just using seasonality at the moment as sort of a guideline to avoid an unnecessary loss, because I don't see any reason gold couldn't come down slightly lower and have sort of a profit-taking dip, whatever it may be, whether it's just seasonality taking place, profit-taking, some dollar strength, you know, it could be anything. I don't really care. So yeah, it's just something that I'm taking into account with gold at the moment. The thing I don't like about a lot of the yen pairs actually is this sort of pullback we're having. So this, you know, if I was looking to go short, this would make sense to go short here. We just touched off this 200 moving average. I'm not sure. We've not quite come back 50%, but we almost did. You know, it was close enough, really. And this is kind of the factor for me that I'm just a bit cautious of. The same with dollar yen as well. So be very careful, because the BOJ might not hike rates now, but you know, it is the BOJ. Same with the interventions. We don't seem to really get any warning of those either. So yeah, I'm kind of done with the yen pairs for now. I actually quite like the setup here. The problem is I'm getting 2 conflicting entry signals. So for my intraday strategy would be kicking in here. So it would be, you know, prices just the moving averages just switched from a bullish trend to a bearish trend, obviously indicating a trend change. We've got the RSI that's overbought. Let's see, is this a fib? Oh, it is. It looks so good. We've just rejected, or we're currently rejecting this fib level. The problem is I don't want to go short, because technically on the H4 we've just bounced off the 200. And you know, the dollar isn't exactly doing too much at the moment in terms of moving to the upside. So Yeah, I wouldn't really want to be selling. Sorry, wouldn't want to be selling. So the CAD just cut rates this morning. So long positions, ideally, just based off that. Let's see what the Edge Finder says. Actually, I've not checked it today. Let's see if there's any news or anything to look at here. So AED CAD's not on here. Let's see what the data scanner says. Retail's mainly long. They've got a negative score. Seasonality's bearish. Trend reading's bearish. GDP's positive. PMI negative. Retail sales negative. So yeah, I mean the current data doesn't really support a long position here. So actually, again, I wouldn't really mind going short, to be quite honest. Price is showing rejection at this 200 moving average. Stop loss quite tight, just above this previous little high here. And maybe a very sort of small position like this, just so a 1 to 2. But then, you know, again, the problem is this weekly 200 moving average. I don't want to sell into that because the 200 moving average essentially acts as a very, or can act as a very strong dynamic support and resistance. I'm not saying price can't break it. It's just I don't want to purposely go into short against the 200 when we're so close. So it's just small things like that you need to pay attention to. I mean, for you, it might not matter, but for the way I trade, I use moving averages quite religiously. So obviously I have to put a little bit of respect on them, especially when it's on the weekly time frame. So I know stocks are down at the moment. I keep seeing news alerts by Bloomberg. Stocks are down, investors selling, blah, 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 blah. But yeah, I don't really like this candle we've just had off this resistance. Based on that alone, I wouldn't really be looking to buy. Although the trend is still bullish, technically, you know, we have technically created a lower low. But in my book, that's not strong enough to say we've changed trends. So yeah, technically I'd be looking to buy, but I would need to see a break and a retest of this level really in order to buy. Or the other situation is looking for a pullback into this fib level and a continuation up. They're the only two situations I'd be looking to buy.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.